Hello and welcome to this brief introduction to Level 2. One of the most common questions we get asked by clients is what is Level 2? And put simply, unlike Level 1 data, which shows executed trades on individual stocks, Level 2 data shows the composition and distribution of all available buy and sell orders on individual stocks, whether they be sets stocks or SEAQ stocks. I'll draw the distinction between those two types of stocks as we go on. But first and foremost, let's open a Level 2 window. At the moment we're looking at a FTSE 100 heat map, top fallers to top risers. So the biggest rising stock today is HSBA, which is HSBC Holdings. So I'm going to right click on the ticker there and I'm going to load a Level 2 window. That will then load a Level 2 window for HSBC Holdings. So let me just pull the cursor up there so that you can see very quickly what the Level 2 order book looks like. Now I'm going to give you a brief introduction to what Level 2 is and the distinction between SETS and SEAQ. So 1997, SETS, which stands for Stock Exchange Electronic Trading Service, was introduced, and what this does is it matches buyers and sellers automatically without the need for the intervention of a market maker. Trades through SETS stocks are generally stocks traded in the broader FTSE 350 space, and SETS traded stocks generally offer much tighter spreads. Now SETS stocks can be identified by the segment code, which is displayed here on the right hand side of the order book, and the HSBC Holdings is a SET 0 stock. Now we can see straight away we've got the yellow strip, which shows you the best bid and offer for HSBC Holdings at this current point in time. So 714.7 is the bid price, 714.9 is the offer price. On the bid side we've got 7 orders comprising 10,111 stocks, or shares if you like, and the composition of these stocks is made up in the dark blue here on the left hand side. As you can see, it updates in real time and you can see the distribution on the left hand side of each individual trade. Now the red flash there usually indicates a deleted order. The green flash means that an order has been added, and an amber flash means that an order has been amended. Okay, so that just gives you a brief indication of how the order book is populated. Now on the right hand side here we have a scroll bar, and we can scroll all the way down and see the various different orders at each individual price point, going all the way down to 500p on the left hand side of the price, which is the bid price. When I talk about the left hand side of the price, I'm talking about the bid price. When I talk about the right hand side of the price, I'm talking about the offer price. So you can see each individual order at each individual price point, and that's the detailed view of the order book. What I'm going to now look at is the summary view. Clicking on there, that gives you a much more top level view of the order book, and then you can see the distribution of each individual price point and the number of orders at that price point. So you can see straight away at 71470 there's 4 orders totaling 7,000 stocks. Obviously it's now changing in real time, and you can see that it updates. As it updates here in the middle, on the right hand side here you will see the executed trades going through. We've also got important price information data here on the right hand side. You've got the latest executed trade, the change on the day, the percentage change on the day high low, the market capitalization, and the normal market size for that particular stock. So 7,500 shares is normal market size, and you can see most of the executed trades there are below 7,500. At the bottom of the order book we also have order book statistics, and we can see straight away that on the bid side there are 221 different orders, 223 now, totaling 1,180,594 shares. On the right hand side, or the offer side, there is 191 orders totaling 910,000 now. So that gives you an indication of how much interest there is to buy and how much interest there is to sell for all of the order book. Now typically that's not the full story, because you can get a lot of orders on an order book which are nowhere near what we call the touch price. Now the touch price is the yellow strip price. It's the best bid offer. So what I'm going to do here is I'm going to change the best bid offer price to just only show all orders 2% either side of the bid and the offer. And now you can see straight away that there is an even distribution of buyers to sellers on HSBC. In fact, sellers slightly outweigh the buyers in terms of volume by about 60,000 shares. So by doing that, you can basically get rid of all the fluff, as I like to call it, the orders that are basically not near the target price or the touch price, and therefore not really relevant to the underlying trading day. So I'm just showing all the orders 2% away of the best bid offer price. Just going to turn that off like so, turn that off like so. So that is a set stock. Now SEAQ stocks, on the other hand, are generally smaller to mid-cap companies, as I said earlier, including AIM companies where liquidity is somewhat limited. So an example of a SEAQ stock would be a small cap stock like Biology, for example. So I'm going to type in Biology, and you can see straight away the order book is a lot smaller. The order book stats there: 7 bid orders, 7 buy orders, 7 sell orders, 350,000 each side, and there is also a market maker code for each stock. Liquidity in these stocks is a lot less. Therefore, in most cases, you will probably have to phone up for a price. Now at the moment the best bid offer is 6.25, 6.75. If you phone a market maker direct, you may get a better price than that, or you may not. So that's level 2 for small cap and AIM stocks. Okay, so that's what level 2 tells you. Now let's talk about what level 2 doesn't tell you. It doesn't tell you what's going on behind the scenes. It doesn't tell you whether large orders are being worked, whether the market is net long or short, or whether the market is being spoofed. What do I mean by being spoofed? Well, iceberg orders are a favourite ploy to be able to execute large orders. For example, let's say a company wanted to buy or sell 1 million shares. They wouldn't put the whole order into the order book. That would be like showing your poker hand to other players, and you would drive the market against you. What would happen typically is the order would get split up into tranches, only displaying say 50,000 shares at a time. This avoids spooking the market and sending it against you. What then happens is the market executes the order slowly over a period of time, slowly chipping away at it, and hopefully no one is any the wiser. Another good ploy, or another ploy that market makers use, is called flipping or flippers. What happens with flippers is a market maker will post a large buy or sell order close to the touch price, inducing the market to think there may be an interest or more interest to buy or sell than there actually is, and then reversing the position and catching the market the wrong way round. We call that flipping or spoofing, and it's very easy to watch or find spoof orders, because what happens is they're usually round amounts of say about 100,000 shares, and as the touch price moves up or down, so the order moves up or down alongside it. So that's flipping. So anyway, hopefully that's given you a brief introduction to how level 2 works. It can be quite useful when the market's approaching a significant high or a significant low, because sometimes you'll find that the distribution of buy orders outweighs the distribution of sell orders by a significant margin. So anyway, hopefully that's given you a good indication of how it can help in your trading, and that concludes this introduction to level 2.